Good morning. Let me tell you about an overlooked area, taxation on your investments. And we know about the tax rates out there. They can be zero. Some people have enough deductions that they don't pay tax. Normally, we'll see 25%. But did you know it can push 50? Now think of this, 50% on money you're earning. The tax code goes up to about 37 for federal. State I'm in's another 6. Now we're at 43. Then you got social. If you're self-employed, that's 13%. If you're not, you're paying another 6% on that. Now let's see, what have we got there? 37, 6, another 6, 12 is 49. And then you add in the Medicare tax. My goodness. And then you go to the store, and where I am, you go spend $1 and you got to give them another dime, another 10%. So the tax code for some of us is confiscatory. Man, you put it out there and it's gobbled up. We need, taxation is correct in a country, but who's going to run this thing and put a fire department out there and the police and run the government? And we need taxes. However, the tax code is fair to us. We have to use the tax code. So the point I'm making is, when you go into an investment, think about the tax situation on the other side or as it's growing. Good example. Let's say that you go out and you buy a good growth mutual fund. You pick the company, it doesn't matter. If you do no tax planning on it, each year you may be issued a statement, a 1099, that you received interest, dividends, and capital gains. Okay, so you pay as you go. The thing is, if you have a good investment and it grows, you literally, and I've seen this, you can have an income just like what you're earning growing in your investments. Now the good news is it's growing. The bad news is you're taxing as you go. Okay? So let's say we don't want to pay taxes as we go. We want to defer it. Well, that's where you get into the IRAs and 401s and pension plans. You put the money in, you take a deduction. It's deferred, the tax we're talking about. It's deferred as your money grows, and you pay it at the end. I have a question for you. Are taxes in our country going up? Are they going down? It's interesting because we're voting next week, and depends on who ends up the winner. We're going to go up or down. Probably won't go down, take that back, but staying the same is pleasant right now because it's low. The party gets in and they're going to tax the fire out of us. That's not a negative. I ain't doing politics with you, but we'll know it. Okay, so tax as you go, deferred. What if we could set up something where we're never taxed? And you know where the main area that we hear about? Roth. The Roth accounts, the 401s and IRAs. You put money in there, and when you pull it out, you're never taxed. It grows deferred, it's never taxed. Another area that's overlooked, people don't know about, is certain life insurance policies. You can build cash in there, and there's a way to take a loan out of it, and you never pay tax on that. And the death benefit is tax-free, including the cash in the contract. Interesting stuff we have out there. So there are 3 ways to look at taxes, and we've explored those, and then next time we'll talk about where you should take the tax hit. Until then.